In today's video, I'm going to reveal a simple yet effective trading strategy that I use every single day in the market to make consistent profit like this, and this. This strategy sets itself up every single day in the first 90 minutes of the market session. It doesn't require any fancy indicators and it doesn't take hours to look for a setup. And the best part is that it's so simple that even as a complete beginner, you can't mess this up. I'm going to show you the entire strategy from A to Z with a complete 3-step formula that you can follow and start executing the strategy starting today. We're also going to walk through real trading examples so you can see how this strategy plays out in genuine market conditions. And look, if you're wondering if this is really going to work for you, this is the exact strategy that I've taught my students who are making daily profits in our community, posting win after win after win, just like you can see right here. These are real people making real money from the markets. So with that being said, let's get straight into the video. The goal of today's video is to learn a simple and proven trading strategy that you guys can use to make consistent profits within the first 90 minutes of the trading session. You're going to learn one trading entry model that is repeatable and mechanical. That means that you won't be using your gut feel. You're not going to be using discretion or take any guesses about when you should be entering or exiting a trade. You're going to execute based on a specific set of rules that you're going to learn in this video. The entry model doesn't really require any daily bias, so there's no confusion around whether you should be going long or short. You won't need any indicators whatsoever, and the strategy sets itself up, as I said, every single day. By the time you finish this video, you'll understand the full entry criteria, where to place your stop loss, and the exact take profit levels that you're going to be targeting every single time. The 3 steps to our strategy are: number 1, creating our range, which is necessary when it comes to trading. You always have to have some kind of range that you're working with. The second step is waiting for confirmation, and what that means is we're waiting for a specific setup that tells us that it's now okay to execute the trade. Then the third step is setting your stop loss and setting your take profit and entering the trade. Now, before we get into step 1, we're going to be using this strategy on NQ. It can be used on ES, on crypto, Forex, gold, silver, or whatever else you're trading. So let's get into step 1 on creating our range. So what is a range? Simply put, a range is 2 levels that price is trading within. So simple example here, let's just say this is your price, right? So we're going up and down within this kind of area. Your range essentially would be the top right there and the bottom right there, all right, roughly. I know these aren't perfectly within the lines, but let's just say price is trading within this band of price, right? Typically, what we're looking for as traders is for this price to eventually break outside of the range, something like this, and for price to then continue in the direction that it's broken. Same rule applies if we were going to the downside here, it would just be breaking the lower end of the range. Then, when the price actually breaks that range, a trader would then be looking to actually execute a trade around about in this area to take a long, in this example, into the direction, right? So to continue the trend to the upside. So that really is why finding a range is important, because it allows us to determine whether we're going to go long or whether we're going to go short, because all we're looking for is for that range to basically be broken. But how do we actually find our range? We're not going to just open up our charts and look at any random time during the day to find a range. No, we're going to look at a very specific range that forms at a very specific time every single day. How do we do that? Well, the first thing we want to do is wait for the New York Open, which happens at 9:30 a.m. Eastern time. We're going to be trading the New York session specifically, and that's where we're going to be able to find this range. So every single morning, we want to come into the markets and identify that New York Open, once again at 9:30 a.m. Eastern time. So if you live somewhere else in a different country with a different time zone, make sure you check the time difference so you know exactly what time you need to be at your desk. I'm in the UK, so for me, that's 2:30 p.m. UK time. Now you might be asking, why do we use a New York Open rather than the London Open or the Asia Open? Well, the reason why is because specifically when we're trading stocks and we're trading indices, the New York session is going to have the most volume and volatility. And whenever you have good volume and volatility, we get the best price action for the best possible results. We get the most movement, right? So we're specifically going to choose New York at 9:30 Eastern, which is market open. It doesn't mean that you can't use Asia and London. You can use those sessions if they work better for your schedule. We've got a lot of students in our community that actually crush this model in those sessions too. But in my personal experience and for my personal circumstances, I prefer to trade New York because it works better for my day, and I find that my results are really good during the New York session. So what we're going to do now is we're going to focus on the first 5-minute candle of the New York Open. So it means when 9:30 occurs, we're going to sit at our desk, we're going to open up the charts and go to the 5-minute time frame and look for the first 5-minute candle that actually forms on the charts. When you get that first 5-minute candle, you're going to use that individual candle to mark out the high and the low just like this. And that's going to give us the range that we can work with, right? I showed you before how we had a high and and a low of a range. Right here, we've got a high and a low of a range as well, but we're just using the 5-minute candle in order for us to give us that range that we can work with. Next, what we're going to do is we're going to move over to the 1-minute time frame. So we've already marked out that 5-minute high and low, right? So when we go over to the 1-minute chart, we can see that we've got 5 minutes of price action, right? Got 5 candles there, which represents and equates to one 5-minute candle. So now that we have our range and we can see that price is trading within that range on the 1-minute chart, we move on to step 2, which is confirmation. Now, to get confirmation on a trade, we need to wait for the price to break either to the top of the range or the bottom of the range on that 5-minute range, right? So we've got the high and the low. We need these 1-minute candles to either hit the top or for it to hit the bottom. Now, is it enough for price to simply just trade outside of that range and just break it without any kind of form? Well, the short answer is no. Here's an example where price has actually broken the range, right? But this actually wouldn't be a valid confirmation. It can't just be price trading outside the range. We're looking for a very specific sequence. In order for us to convert the trade, we have to wait for what's called a fair value gap sequence to break outside of the range. So real quick, what is a fair value gap sequence? So a fair value gap sequence is a 3-candle pattern, like you can see here, where the first candle's high is not overlapping the third candle's low in a bullish example. If it's a bearish example, it would simply be the first candle's low doesn't overlap the third candle's high, right? So we're just flipping the scenario. Essentially what that gives you, as you can see here, is this really lovely gap in the middle of the sequence, right? We've got candle 1, 2, and 3, and we can see that candle number 2 has this very nice gap in the middle. That is your fair value gap candle, right? So candle number 2 is what I'm going to refer to as your fair value gap candle. The 3 candles all together is a fair value gap sequence, but the second candle itself is the fair value gap candle, okay? So when we go back to the 5-minute range, we have to wait for a candle formation to break the range with a fair value gap sequence. Like you can see right here, I've drawn out the high and the low of this 5-minute range, and you can see just on the end here, as that candle formation is breaking the range, candle 1, 2, and 3 is actually breaking the range. You can clearly see that we have that formation breaking outside of the range. Once we had that, the confirmation is valid. Now, a couple of things. For the confirmation to truly be valid, the fair value gap candle, so candle number 2, has to be breaking outside of the range, right? It needs to be breaking outside. Or as a secondary option, if the fair value gap candle itself, candle number 2, is not breaking outside of the range, then what you can do is you can have the third candle printing outside of the range, right? So candle number 3. What that means is that the actual fair value gap sequence, remember the sequence is a 3-candle pattern, right? Candle number 3 needs to be breaking and printing outside of the range. That's option 2, or option 1 is the actual fair value gap candle itself is the one breaking the range. I personally feel when you get the fair value gap candle, candle number 2 breaking the range and it displaces outside the range, that's when you get the best results. That's what I would call an A++ setup. A setup would be if you get candle 3 printing outside the range. Now, just to clarify, a lot of people ask me, what does it mean if a candle prints outside the range? All that means is that the candle has actually closed, right? The body of the candle has to close outside the range. It's not good enough if the candle just goes outside and then it wicks back down. We're not looking for wicks here. We're looking for a full candle body close. That means the body of the candle, not the wicks, has to close outside the range. A few things to remember. For a fair value gap candle to actually be valid, third candle has to be printed, right? So for a sequence to actually be a sequence, it has to be 3 candles. If the third candle comes down and it overlaps the first candle's high or low, that means that it's no longer a fair value gap sequence, right? There's no gap between that second candle. The second candle has to have a gap. So in order for you to confirm that the gap is there, you have to actually wait for the third candle to print. You can't just enter the trade if you've just got one big candle number 2. You have to wait for candle number 3 to actually print. So once you have those conditions met, you can then move on to step number 3, which is entering the trade. Now, the entry is going to be on the closure of that third candle, right? So when we got the full fair value gap sequence, we will then be entering the trade as soon as that third candle has closed, right? So that's your entry point. For the stop loss, you're just going to place it at the top or the bottom of candle number 2. So the fair value gap candle itself, you're just going to put the stop loss right to the top of that candle. You're going to include the wick as well. I'm going to show you some examples of this when we're on the chart. Don't worry. But for now, just understand that the stop loss needs to be at the top or the bottom of the fair value gap. Obviously, if it's a bullish move and we're going up, that means the stop loss is going to be at the bottom of candle number 2. If it's a bearish move and we're going down, that means the stop loss is going to be at the top of candle number 2. Remember, include the wick as well. For the target, you're going to aim for a mechanical 2R every single time. And in simple terms, what that means is that let's say you're risking $100 on the trade. When you look at a position like this and you have the red box is the risk that you're putting on, right? It's the amount of money that you're risking on the trade. So if you're risking $100 on the trade, let's say the red box represents $100, that means that you're targeting $200 for your profit. bit, let's jump onto some real examples to see how this model plays out in reality. So you can see here, we're on the MNQ chart, which is just the micro NQ, okay? And you can see here, we are on the 5-minute time frame, first of all, and it is 9:30 right there. You can see the label at the bottom. And essentially what that's telling us is we are now at New York Open. As I said, we're going to be looking for the first 5-minute candle. So this 5-minute candle has already formed here. And what we're going to do is we're just going to mark out the high and the low of this 5-minute candle. So I'm going to take my trend tool, mark out the high here, and I'm going to mark out the low. Remember, we are going to include the wicks when they're marking out these levels. Then once that's marked out, we've now already got our range. So that's step one. Step two is we're going to move over to the 1-minute time frame and we're going to look for a fair value gap sequence. Now we've got a fair value gap sequence right here, right? We've got 1, 2, 3. That's a fair value gap sequence. Let me just mark this out for you so you can clearly see it, right? So you candle 1, candle 2, and candle 3. But would we enter a trade here? The answer is no. And the reason we wouldn't enter a trade is because the sequence hasn't actually gone outside the range. For this to be valid, this candle needed to print outside here, then it would be valid, but this is not valid yet. So we're not going to take this one. Let's just move on a little bit and print the next candle. Okay, so now price has traded to the downside. And once again, right, we've got a fair value gap sequence that has actually printed here, right? So we've got one candle here, candle 2 here, and candle 3. There's a fair value gap there. But do we trade from this fair value gap? The answer is no, because it hasn't printed outside the range, right? So we're not going to use that one. But then if we come down a little bit, we can see that there is a fair value gap sequence here, right? Candle 1, candle 2, and candle 3. I'm going to take this tool again. Let me draw it out. There's a fair value gap, right? So now, because candle 3 has printed outside the range, not only candle 3, but candle 2, which is the fair value gap candle, has also printed outside the range. This is what I would consider an A+ setup. So we're going to go ahead and take our short position tool. We're going to enter the trade at this point right here. Why here? Because this candle has closed, right? Candle number 3 has closed here. So the entry will essentially be right here. The stop is just going to go to the top of candle number 2. Remember, this is candle number 2, the fair value gap sequence. The stop loss just has to go to the end of that candle number 2, right? So we're going to include the wick, put the stop right there. Now, when you're going for your target, if you click on the short position tool in the middle, you're going to see it says risk reward ratio 0.5 here. What it actually needs to say is 2. And remember what I said, we're going to be looking for a 2R every single time. We're mechanically targeting 2R, right? So let's just say the red box is $100. This green box represents $200. So that is how we're going to be positioning ourselves for this trade. So if we were taking 10 contracts on NQ here, you would see that 10 micros would equate to $1,135 on the stop loss, and 2R would be $2,325 if we manage to hit target. So let's go ahead and see how this plays out. There we go. Target hit. That's over $2,000 that would have been made on that trade. And it went from 9:43 up until about 10 o'clock. So about 17 minutes of work there to try and get that trade in and make that money, which ain't so bad if you ask me. I'm going to take you through another example in a second, but I just want you to understand that you don't really have to overcomplicate this. I know that looks really simple, and the reality is that it is really simple. You don't have to make it any more than what you've just seen there. Keep it simple. Now, you're also probably thinking that just seeing one winning trade doesn't make this a winning strategy, and you'd be absolutely right. So in a moment, I'm going to show you another couple of examples to show you how this really works in multiple different scenarios. But more importantly, this is a setup that I actually teach to my community members in Cryptic Hustle, and it's something that gets used by all of our students every single day. In fact, just a couple of days ago, several members in my community actually took this exact model setup, and we all ended up walking away with a bunch of cash and a bunch of profit from the trade. So again, that was simply just using this one candle 5-minute range setup. Super simple. Also guys, for anybody that wants to simplify trading and get profitable faster, check out my trading course, the 90-minute trader, where you get access to my entire trading strategy, the trading tools, as well as my trading community, where you get to see my daily market analysis, my trade ideas, and get to connect with other traders who are crushing it and making bank every single day. And if you're wondering if this really works and if you can get profitable with this, check out the number of reviews we have right here from all of the students winning trades every single day. They're doing this all on their own after watching the course, not without signals, not without copying me. They're just confidently executing on the charts, making money every single day. You also get a ton of other valuable resources to help you get profitable faster. You get a session tracker, you get a sizing calculator, you get a free trading journal and a news calendar and a bunch of other stuff to help you get there quicker. I've dropped a link in the description below if you want to go ahead and check that out. Let's jump into another example. Once again, we're on the 5-minute time frame on the exact same ticker, and here we are at 9:30 Eastern time, New York Open, and we've got our 5-minute candle here. I'm going to go ahead and draw the lower the range and the higher the range right there, and then we'll switch over to the 1-minute candles, and you can see that we've already got 5 1-minute candles, obviously representing our 5-minute frame, right? So let's go ahead and see if we can get a fair value gap sequence printing outside of the range. Once again, you can see that there is a fair value gap here, right? But we're not going to execute this trade. Why? If you've been paying attention, because it hasn't broken outside the range. So it doesn't count, right? We're looking for a range break with this fair value gap sequence. So let's see what happens. Okay, right here, you can see that price is actually broken outside the range, but does that mean that this is valid? The answer is no. We can't take this trade yet because this hasn't actually printed outside the range. So this is not valid for us right now. Okay, now price has come back into the range. That's great, because right now we shouldn't have entered a trade because we don't actually have that neat fair value gap sequence that's actually given us an opportunity to go into this yet. So there's no trade yet. Let's just wait. Okay, now let's take a little closer look here and bring this back a little bit. What you can see now is we once again have our fair value gap sequence, right? We've got candle 1, candle 2, and candle 3. So because we have a fair value gap sequence here and candle number 2 is breaking the range, this once again is an A+ setup for me. So this is where the candle is printed up. This is pretty far, right? It's quite a big candle. So it's not the best in terms of the third candle close. It should be a little bit smaller than that, but we're going to take it anyway because this is what the market has given us. So entry would be here because that's where the candle has closed. Whereas the stop loss, guys, stop loss is at the bottom of fair value gap candle, right? So this is candle number 2. Stop needs to go to the bottom of that candle, okay? Then for our target, once again, if you look at the risk to reward ratio, all we're going to do is target 2R, right? Which is right there. So let's go ahead and see how this one now plays out. So we've got a little bit of drawdown here, which is completely fine. It can happen. Let's just extend this out a little bit so we can make sure we get the full move. Still in drawdown, all good. We're just going to wait and see how the trade plays out. Very, very choppy trade, but we're actually in the money now. So let's see how we go. This is why you got to trust your conviction, right? You got to just trust the model, because if you look at this, we came pretty close to the stop, but if you just keep your conviction and you keep it cool, just let the trades play out, right? It's a lesser than that. Now, this is a very long hold. This is a much longer trade than the last one. Last trade was only 17 minutes. This trade has taken us a bit of time, but we eventually have managed to get to the target. We entered this trade at around about, what time was it here? It was 9:50 and we hit the target at 2:30. Once again, you would have made a decent amount of money on that if you sized up with 10 contracts, and it would have taken you a couple of hours to get this trade. But again, for a couple of hours of work, pretty good money for just this kind of movement, right? And again, the simple setup, guys, is such an easy setup to do this. Don't overcomplicate it. All right, let's look at another example here. So we are once again on the same ticker. We've got 9:30 candle here. We're just going to mark out the higher the candle and we'll mark out the low, right? Switch over to the 1 minute time frame. You might notice that this range is a lot tighter than what we had before, but that's okay. Let's go ahead and see what happens here. All right, so you can see here just a couple of things that I want to point out to you here, right? The price here traded up into the range, but it wicked down. So remember, we're not looking for wicks outside the range. We need body close outside the range, right? So the price has traded down here. Let's take a look. We have got a fair value gap here. We've got a little sequence here. So according to the rules, this would be a trade that we execute. Now, if you take a look at this, right, the gap is very, very small. So because the gap is really small, it tells me that this isn't the strongest displacement candle. So I don't have a lot of conviction in this trade just because the fair value gap is so small. I want to see a very strong displacement candle, not something like this where the gap is so small. But we are going to enter the trade because the model has presented and we want to do things mechanically, right? So we've got candle 1, 2, and 3. So we're going to have to enter this trade here. So let's take it, right? Now, the other thing is this is candle number 2. So the stop is going to be up to here. All right. And again, just a reminder, candle 1, 2, 3. That means that this candle has the gap. The stop has to go to the top of that candle, right? Let's go ahead and take the target down to, and let's see how this plays out. Okay. Now, in this example, we would have been stopped out, right? And that's absolutely fine because not every single trade is going to work. Not every single trade is going to give you the perfect scenario, right? So that's cool. We stopped out. But remember what I said, we're going to give ourselves an opportunity to enter a second time. If price comes down to the downside and gives us a setup and we get stopped out and it trades to the upside, we've got another opportunity here. It doesn't mean that it's over, right? So let's go ahead and take the second setup. If we take a look at price now, we can see here that price has actually given us another opportunity to take this trade. I want to show you a couple of different things here, right? First of all, you've got this fair value gap here. So you've got candle 1, candle 2, and candle 3. What that means is that you could have an entry right here, right? And your stop loss would be here. But I want you to take another look at this and look very carefully. We've actually got a better setup here. If you look carefully here, you can see that because of this third candle that's printed here, this fair value gap sequence is actually more effective, right? We've got candle 1, candle 2, and candle 3. And remember, when candle 2 is printing outside the range, it's a much cleaner setup. If we used this gap down here, it means that our entry is actually going to be a little bit earlier, and the fair value gap candle itself is not actually printing outside the range. I always prefer for you to take the entries where the fair value gap candle is printing outside the range. It's a much cleaner setup. So candle 1, 2, and 3, you've got a 3 candle pattern here. We've got a fair value gap sequence. Let's go ahead and try this again a second time. Again, it doesn't matter if we lost the first one. It does not matter. We're just going to try again a second time. You're not going to win every single day. That's part of the game, right? This model has a great win rate, but you're not trying to make it or break it in one day. Nobody's going to make it in this game in a single day, right? So you have to be realistic. You are going to lose, and that's okay. We're going to go ahead and take a second attempt here. here. Once again, the stop is just going to go to the bottom of the fair value gap candle, and we're going to target 2R, so $100 risk, $200 profit as an example, right? Let's see how this one plays out instead. Okay, bam. So on the second attempt on this setup, we get a really easy move. It went from 9:47 till about 9:58, well, about 10 o'clock. Once again, pretty much 13 odd minutes, 15 minutes, whatever, to go and hit target. That is great work. Again, just remember, if you lose a trade, it doesn't matter. You're just going to look for the next setup. And even if you lose twice, 3 times, 4 times, it doesn't actually matter because you're not trying to make it in a single day or 2 days, right? A great mentor once told me, right, that don't give yourself just 2 to 3 hours in a day to make your entire week's wage, right? You use the entire week, right? Use your Monday to the Friday to actually make your money. You're not trying to make your entire week's money in a single day. So approach it with that mindset. If you have a bad day, it doesn't matter. Just move on to the next day, and we're always going to have more opportunities every single day. Look, if you made it this far, you've got everything that you need to become a profitable trader. But the crazy thing about this, right, is that this is the bit where you have to be really honest with yourself. This probably isn't the first time that someone showed you a trading strategy, you've gone, taken it away, and you still haven't become successful. You're still not profitable. I know that because I was in the exact same place when I first started out years and years ago. It took me over 5 years to actually become profitable, and I went through a lot of tough lessons to find consistency in this business. And that's exactly what I don't want for you or for anybody watching this video. I don't want you to have to waste all that time and go through all the hurdles that I did in order to get to that level of profitability. And that's why I built this YouTube channel, and also why I built my course, The 90-Minute Trader. Inside The 90-Minute Trader, you've got every single tool that we use, every video, every resource. It's all designed to shortcut process of dealing with that pain that I had to go through myself. And when I teach people, I always think about that younger version of myself, the younger version of Joey that started this almost 10 years ago now, who was completely lost and overwhelmed by looking at these charts. And I really wanted to get good at trying to figure this stuff out on my own and achieving that financial freedom. And look, anybody that might be in that exact same spot right now, maybe it's you watching this video right now, shouldn't have to spend years trying to figure this stuff out when there's a complete system and a community and a structure of how you can actually fast track yourself in this marketplace, right? When I started this, we didn't have all the resources that we have today. We didn't have all the education. We didn't have all the great people out there that are teaching incredible strategies and communities where you could come together and learn with people. So you're in a great opportunity right now. You've got a great time right now to be able to do this at a high level. Inside the 90-Minute Trader, you're not just watching lessons, but you're getting access to a full ecosystem that I've built for serious traders. You get exclusive software tools, enhanced dashboards that track your performance, a full trading journal that I built myself, all the different tools that we use inside 90-Minute Trader to stay disciplined and consistent. You get access to every single strategy that I use, including models that I don't actually teach on YouTube, which are all back-tested, proven, and used by our traders inside the community every single day who are posting wins and profits every single day. Plus, we break down the markets on a daily basis. We walk through key levels, outline exactly what we're going to be looking for in the day ahead. Look, whether you join the 90-Minute Trader or not, I still want you to win in this game. And I'm always going to be producing content like this for YouTube all the time. So you're going to pick up great education. You can go out and execute this stuff for yourself. But for those of you who are really taking this seriously, you want to fast track, you want to get to profitability faster, then everything you need, all the tools, the structure, and the education is inside the 90-Minute Trader. You can absolutely do this on your own, but it might just take you a little bit longer. The 90-Minute Trader simply just gives you a shortcut to get to where you're trying to get to. If you want to go ahead and check out the 90-Minute Trader, I have left a link in the description below if you want to go ahead and check that out. And for everybody else that's watching this video, thank you for your support. Thank you for watching. Make sure you hit the like and subscribe button if you are new, and I'll see you next week for the next video.